I made $3,000 with one trade and one contract, and I'm going to break it down exactly step by step on how I did that with my full strategy at the end of this video. So we're going to start off on the chart replay because obviously it's not the same day. We start off by marking out previous day highs and previous day lows. Once we have our previous day highs and lows marked out, since yesterday was a bearish day, then we're targeting the lows. I had a full tutorial on my daily bias and how I walked through it step by step on what I did. We mark out any confluences. Right here we have a liquidity, we have a fair value gap, and we're in a fair value gap right now. This is already adding confidence to my strategy because we are already in a downtrend. We have a fair value gap towards the downside, and we are in the fair value gap right now. We should be targeting the lows of the daily and the 4-hour liquidity. They are the same. We have equal lows, which is very strong, and you should be targeting those areas anyway. Now we drop down to the 1 hour and we continue marking out our confluences, even though I'm already very set on my daily bias. Now right here we have 3 highs at equal highs, so I have a feeling we're going to sweep up into those areas first and then drop down, as we are also in a fair value gap. That's my way of thinking throughout my whole higher time frames. That's how I determine my daily bias. I had great confidence going lower that day when I traded. So then we drop down to the 15-minute, and now we're marking out our last bit of confluences. I know what you're thinking. Why am I marking out so many things? This is annoying. Well, it's because price is fractal. Whatever's going to happen on the 4 hour is going to happen on the 15-minute or the 2-minute or the 1 minute. It doesn't matter. Price is fractal. You need to see these things to see the full picture. That way you know what you're targeting. You have to find the areas that you want to target and the areas that you find that are very structurally accurate. Does that make sense? That's why market structure is so important. So now that we're on the 15-minute, we're waiting for our confluences. I know it gets frustrating or annoying hearing confluences. Why is there so many confluences on every time frame? You need to know that price is fractal. So whatever happens on the daily can happen on the 1 minute, whatever happens on the 4 hour happens on the 10-minute, the 15-minute, it doesn't matter. Understanding that really improves your market structure analysis, because then you can see, okay, we have these confluences aligned. We are really waiting for a retracement. Now that we have a retracement to the fair value gap that we wanted it to go back to, we are looking for a lower time confluences. Let's list out the things that we've seen so far. So we listed out our previous day highs and lows. We have our higher time frame confluences being hit or retraced to, and now we have our 15-minute confluence that's being retraced to that was in the 4 hour and 1 hour fair value gap. And so now we're just waiting for a displacement towards the downside. And so I'm going down to the 1 minute and I'm waiting for my setup to happen. We have technically a liquidity sweep on the lower time frame since it pushed higher. We have a market structure shift. Now we're waiting for retracement. So we have fair value gaps. Now we're waiting for a retracement. So what I first started out looking for was the 1 minute retracement, and price just kept dropping. So I went up to the 5 minute and I'm waiting for a retracement off the 5 minute. And I'm going to the next retracement percentage that lies in a confluence. I just set a limit order and I honestly completely forgot about it. I went to the 62% retracement, well, because it's the only confluence that was aligned with the retracement zone. How does that make sense? Okay, so look at the 70%. It was not in a fair value gap. I know it sounds dumb, but that's how I would think. You could have argued that the 79% was a order block. One, I don't like taking trades off order blocks or breaker blocks, which the 50% was on a breaker block too. Not really, because the breaker block would have been right there. So this is not a confluence. This, you could say it was a confluence because it was an order block. I don't prefer. And so the next only option was the 62% retracement, which was right on that fair value gap. Set my limit order there. I really did top tick. It was so sexy. I didn't top tick because I went up in the negative for like $5. See, you see that little bad boy? I really just targeted this liquidity because I thought price was going to go all the way to the relative equal lows right here. I was in it for a couple hours and I didn't even pay attention. I only clicked on it at 1 o'clock when I got the alert or something like that. So now we're just waiting for our take profit. And price just tanks and it chops and it tanks and it chops and tanks and chops. We had our take profit, and this is the actual trade right here. And so let's really just quickly go over strategy. Let's go over the things that you need to do. So in 1, previous day high and low sweep, which we went over in the first one. So we're looking for the previous day highs, the previous day lows. That's what we're targeting. If it has been swept, then we go down to the confluences of the 4 hour and 1 hour. Once we target those areas, or they have been swept, we're going down to the 4 hour or 1 hour, and we're marking out our confluences like liquidity, fair value gaps, order blocks, breaker blocks, and we're using those to target a specific area. So today, price did not sweep the previous day lows or previous day highs. And it was a bearish day yesterday, so we were targeting the lows. So we went down to our 4 hour and 1 hour. We spotted a bearish fair value gap and on both the 4 hour and 1 hour. So we used those confluences to really combine our market structure and form a daily bias. Once we have 1 and 2 done, then we're going to step number 3, where we find a 15-minute confluence that is either targeting the higher time frame confluences, the 1 hour fair value gap and the 4 hour fair value gap, which you could have taken a bullish trade right here from. You could have taken a trade from here up to the 4 hour and 1 hour confluence, the fair value gap. And so once we find those areas, or they are inside the higher time frame confluences, to continue price action towards the daily bias that we think. So what that means is once we had our retracement up to the 4 hour and the 1 hour higher time frame confluence, now we are using that to continue or to pursue our daily bias into going to the previous day highs and lows, or the previous day lows in our example. If you are following my strategy, please wait for the retracement, because you guys are not waiting for the retracement. You're not being patient enough. You need to learn to be patient for the retracement. You could either target those areas, like I said, which is more for the impatient or impatient. I don't like doing that because it doesn't give me extra confidence. I used to do that. Wait for the retracement, at least on to step number 5. So once price retraces to the higher time frame confluences, like the 15-minute, we're waiting for that retracement. Then we are waiting for our entry model. I used the 1 minute at first, and then I like, okay, I don't see anything on the 1 minute. So we waited for our 5-minute retracement, which we also added the 1 minute entry to. We walk through the entry model. We wait for a market structure shift with a fair value gap to a Fibonacci tool retracement. Now it's kind of funny for me to say because I forgot I even had the trade open, but grow some balls, enter. Be confident with yourself. Confidence is the most important thing in trading. You have to understand that. 7, journal. You freaking monkey. That is not racially targeted. You have to understand that once you take your trade, win or loss, you have to journal. Journal if you are proud of yourself for taking that trade. Journal if you're not proud of yourself for taking that trade. Use whatever you can to your advantage that you find that clicks in your brain as fast as possible. And then journal it. Write it down. I have a brand new journal now because I've already went through 2 in the last like 8 months. I keep saying this, you're not going to see the full picture if you're not journaling. So journal. 8, if you're stuck, join the free Discord. Push your trades in the community. Write down one thing you did wrong, one thing you did right. It's that way that you could find others who are relating to you. If you're really struggling, I have a premium Discord that we do calls every Saturday at 11 a.m. Eastern. You're going to ask your questions beforehand, and we're going to take 15 to 30 minutes going over those questions, really trying to break down what you're missing. I'll also be posting every day if I'm going to trade, if I'm not going to trade. I'm going to post what I'm thinking during my trades, before my trade, after my trade, what I'm seeing. That way you guys can understand what it's like to experience what someone like me who actually makes money off the markets is thinking before I even trade, or during my trade, or after my trade. We're going to go over our journals. We're going to go over everything that you need to know to become profitable. There's a link in the bio and in the comments. Click on that link, join the free Discord or the premium Discord. I love you guys. God bless. Have an amazing day. Stay safe.